Good morning. Good afternoon. Hello, hello. As they say in the UK, how are we? What's going on, folks? And we're back after 3 days off. Bet I tell you that weekend went fast. Oof, went quick. It was like the fastest 3 days. I just blinked and they were over. Alrighty. You guys awake? Good, good. So, I've got the overnight sessions in here. I just wanted to show you we're definitely in a range, right? If you were drawing a balance, you would use these highs, right? You use these highs and then that low and that low. So we had position, move up, put it on sale, but we're kind of going sideways here, right? We're going sideways and the market is, so let me just go and show you. So here's tonight's, there's that weird little Friday session. There's Thursday night and there's Thursday. So we use Thursday's the last full trading day. So we use that. This is the inventory. Inventory was short for most of the Globex session, and then it just corrected itself lately here. So we are going to open inside the previous day's range, okay? We're going to open inside Thursday's range. Let me just go and so there's Thursday's range. We're going to open inside it, and we're also going to open inside its cost basis, or in that area. Look for it to be choppy, okay? Now they raised margins overnight because of the war stuff. It was a fairly calm session. Had a couple of big candles here and there. I've been lazy. I used my cost basis from Thursday. But the levels have been working really nice and they show you how mechanically this market's been trading. I gotta say, I'm a little short biased. Right? I'm a little short biased right now because we've been up here, we've moved the point of control up, we've had good distribution. Is it time for a sale yet? Let's see who comes in when we open the doors. So there's that Thursday high. There's a stop here at 75.80. Now, on the old, where is it? I went up and I did a chart using a 1 hour. And I also broke it into half an hour candles too. And I came up with this balance zone of 41 to 68 half. Now we're above it. Let's see if we can draw some kind of, if we can get any kind of a movement past the middle of this zone for longer term traders, right? Okay. So what's that level? You guys see what I'm talking about? 75.82 quarter. So mark that off. Because now you know where the position is, right? You guys with me? You know what I'm talking about? This is the position. See this volume here in this? If we can get over 82, 83, beautiful thing would be to take this and try and sell it up here. Right? I'd like to go lower and test whether that balance low holds, but right now you can see that they're moving the bid higher. And until we take out 75.68, there's really no reason to short it. Get it? Because you'd be doing a look above and fail of 75.68 half all the way down to 41. That's a nice trade. It happened here. It happened here. And then the look below and fail of 41 up to 68. Right? On a longer half an hour time frame chart. Okay? So that's a way, if you don't have market profile, just run a half hour candle and you'll get some amazing, amazing information off of that you can use to make money. Right? So let's see what this thing's got in store for the open. We're already trying to run those upper stops, see? We're already trying to take out the overnight high. If we run that upper stop, we'll be looking for the 80s, and we can go ring that bell at 80. See, look at this. This is that pre-open auction where the bids come in, right? This is, people say, oh, it's an emotional buying thing. That's when people are rushing to get product before they open the door of the store. That's what causes price to go up, and everybody else just pulls their sell orders up to take advantage of it, right? If you see a bunch of suckers coming in, what do? Raise price, right? You with me? Hey, folks on YouTube. Oh, nice, Doug. You bought the 74s. Nice. All is well. All is well. It's Monday, busy Monday. A lot of work to do. Hey, Alan Greenspan passed away today at the ripe old age of 100. Wow. Do any of you remember him? I think he was, what, 4 Fed chairs ago? Maybe 4 or 5? I don't know. It was a while ago, 90s. All righty. We still have 5 minutes before the open. Got a seller at 78. What you should be doing before the market opens I know you're all looking at your trade, but what you guys should be doing is you should be watching this. You should be watching this and going, oh, you know what? There's a seller right there. And they just moved down. Huh? There's a position right here. This is how you should be looking at charts. So they're taking this, they're selling it down. They should stop here and then reverse. If they don't, that means that they've got more competition. They're going to have to sell down to 72. That's how you should be looking at this, right? See how the offer has been moving lower and lower and lower, right? So that early little blip over the last 4 minutes, a bunch of buyers came in, they took the market up, filled them, and then sold it down. See, this is why you never chase price, because they lead you higher to fill you at higher prices. The more desperate you are to buy the product, the higher you will pay. So we're watching this 75, 75 and a quarter level off the open. Okay. If you don't know what you're doing or how you're trading the open, I'm a little short biased. I think we're going to move it down a little bit. A little lower would be good. If we can't take out Thursday's high, okay? This is Thursday. Don't worry about Friday. Friday is, as the Penguin would call it, Friday is a non-event, right? It means nothing, right? A little bit of electronic trade, right? Thursday is the last trading day that you pay attention to, okay? If we can't take out 83, look for a move back down, okay? Or if we take it out and come back in. So one is not to take it out, one is to take it out and come back in, and the other is to take it out, boom, and do this. Those are your three scenarios, okay? So if you're looking on the short side of things, right? If you're looking at that, if you're trying, okay, I'm going to short before the open, right? Work with me here, guys. If you're trying to short before the open, what should you be doing? Say I'm short 73, 73 and a half. I'm short 73 and a half on a couple. I got a 72 and a half bid to see if I can get a fill. If I can't get filled 4 ticks lower, what does that tell me? Right? Where's my stop? If I'm short 74, 73 and 3/4, 4. My stop is 75 and a quarter. If I'm a larger trader, I can use 76. And you'd have to be out here by 78. That's your margin of error depending on the kind of account you have and how much cash you have. Right? So you take one back at 72 and a half, one back at 2 3/4. I'm bid at 72/4, and I'm just playing here to see if I can make a couple of points before the market opens. Can I get a fill at a quarter, or do I have to go and take the ask? I'm taking the ask. I'm flat. Okay? I'm just testing the order flow, right? There's bids here. Get it? You could use that tie to stop. A minute before the open, it might be a little volatile, right? Why do we use the last full trading day? Because Friday was a half day for precisely the reason it was not a full business day. Now, I didn't come up with that rule. That's what the old guys came up with, okay? And they say that it has to be a full business day for it to be meaningful. guess it makes sense. I've never done deep thoughts about it. Here's the overnight high. Let's see if we can go tickle it. There's that stop just under 80. Boom, just took it. They sold into it. Now I'm just being patient looking for, can we go tickle 83? Let's go and see 83, 82 and a quarter, 83. Okay, we're running the previous day high. Woo! A lot of short covering. A lot of short covering. Untraded point of control right there. Some supply there. Okay. All right, 75, 86 and 3/4. And then 76.01 and 3/4. So not bad. The new contract is kind of working with the levels, you know? The levels are working. You know, I had 86 and 3/4 here. And, you know, we tagged 86 half, 87. Now let's see if we can creep over that. Now, if enough people are short, you guys know the drill, right? You know the drill. Remember what we showed you where the position is. Remember what we showed you? Even though I was short biased, I said we're going to take this and we're going to sell it up here. Remember? You guys remember. Come on. You remember, right? I told you before the open, right? Even though I was short biased, I took that one short trade, closed it before the open, and then what did I say? If it takes out the previous day high, you're going to get a lot of short covering, and that's exactly what's happening. That's exactly what's happening. Next stop, 91. Right, and then above that, there's 93 half. This market really isn't built to sell off, unfortunately. They didn't build it that way, folks. You know, they did not make this market to liquidate. It's a market that is marked to market. Do you guys understand that term? Well, we're just letting them destroy the shorts here. Do you guys understand what that term means? They marking a position to market? Well, if you have a market that doesn't really, it's just marking, say you buy something at $5 and then tomorrow it trades at 6 and it gets marked at 6, the close, right? So it just means that your profit is marked, it's locked in. So if you bought a stock, let's say, right, and it never went down, like it just kept going up, and every once in a while it'll correct for maybe like a month, maybe a couple of months tops. And then boom, new highs again, all-time highs. Ooh, here we go, we got a seller. Right? Somebody got anxious, just puked it. Let's look for bids underneath the overnight high. I'd love a look below and fail of 75. That'd be cool. If you're buying the overnight high, right, your stop's just going to be here. Don't waste too much money on it, okay? If you're buying that overnight high. Watch the offer now. On a candle after a big red one like that, what you're thinking is, where are these idiots going to sell into it next? So there, now you have the seller marked, right? That's why I like looking for the look below and fail of the edge, because here you really don't know, right? You really don't know. So what you want to do is you really want to try and wait as much as you can for that 75, 76 action. And you can put some bids in there and throw some stops under 74, right? So if you're buying those 75s, right, then make sure that you put your offers out, because you know there's a seller at 80, right? So if you catch a bid, make sure that your sell orders are in the system. There's no reason, right? There's no reason not to profit. right? So you buy 8, you sell 80 flat. Boom, you're out, right? We're long 78 and change, and we're selling them in the 80s on a couple. You want them, you got them. They're all yours. Take them, take them, take them. Take them flat. Thank you. You're done. Couple of points, 3 to 4 contracts, you make some money. You're watching the bid, and we showed you how to take these trades last week. Do you guys remember when I told you about where you draw a level and then you see the candle can't get to that level? That's your confirmation where you're going long. And then you're selling into the strength that is created by the lack of supply. We talked about this ad length. We did a coaching webinar on it, right? That is a trade that I outlined many times last week. It is a counter inventory correction trade. For those of you who want something fancy, I can be fancy. It is a counter inventory correction trade, right? Inventory corrects, and this is the counter. This is what we call rotation of inventory. This is how markets work, right? So when the candle does not take out that level, right? It means what's between the bottom of that candle and that level. There's a little space here. Those are buy orders, my friend. Those are unfilled buy orders, and that's your signal to go long. Put your stop there, and then poop, just pop it into the when it pops. Right? Nice quick trade. Now let's see if they sell into it up here. We know they're going to sell the 90s here. Let's see. Right? They're going to blow that stop, run it a bit. Right? There's some order flow, so let them come. Let them pay up. Right? And as soon as they don't want to pay up, as soon as that wave of buying finishes, the offers will immediately come down underneath that line at 90, right? There you go. So we always want to trade with the business. Why fight it? Why are you shorting a market as it's going up? You should be shorting a market when it's going down. Right? You let the market tell you where the top is. Why do you need to spend money trying to figure that out? Let somebody else pay. Okay? So when you come into trading syndicate, we teach you practical trading, right? Every time it takes a stop, it creates more buying to the next stop. Remember what we said on the hour chart, on the half hour chart? Position is underneath 68, definitely under 82. Now we're going to take this and we go sell it here. Okay? This is the warehouse. This is Saks Fifth Avenue. This is the highway. It's just commerce. Okay? Nicely done, Dougie. Nicely done. All right, what's next? The next swing high is 76.05 up here. That's our next swing high. We seem to be trucking that way. Well, let's see. Right now, Milo, there's really no back and forth. There's just forth. You know? Right? This is what happens when the supply is underneath you. When the supply is underneath you, price goes up. So we're looking for 75.96. Right? This is commerce. Right? We're taking the bananas to market. Could be a chart of anything. Just happens to be ES contracts. Could be a chart of bananas, apples, oranges. Here we go. Let's see where they sell it down to. I'm kind of thinking 88. I'm not a big fan of trading a candle by itself. I like to have a setup, right? So while you could probably, if you were quick, buy 90, 91, pop it up, pop it out at 93, 94, it's a lot easier said than done, right? There are people who can do it. I know a lot of fast scalpers who can shave 2 points here, 2 points there, and they make good money doing it, but they're fast. So what I'm looking for now is I'm looking for a distribution balance range, right? I'm looking for a back and forth. Like we had a back and forth here for a bit. But I'm looking to see if we get like another like little back and forth that we can trade sideways, right? That's what I'm looking for now. Might be a bigger back and forth than I thought. Could be 90 all the way down to 76, 78. Generally on these kind of trades, if I'm thinking like, like a paper hanger, what you do is you take price up. Now, this is old school thinking. And then you sell it down. You take it up and then you sell it, but you don't take it any lower than that 80, right? To keep people coming in, you got to kind of stop selling at 80. Now, because this is a market and there are multiple participants, you don't control all the supply. So you might not be able to trade it that way. But that's what you want to do. You want to stop selling and then raise price and then see if they'll follow you. Right? That's exactly what's going on right now because there is some order flow coming in, but as you can see, there's too much selling competition and the price is being pushed lower. So let's see if we can get down to that 80 level. Somewhere there should be a bid. I'm not seeing a bid yet. Wow. Look at that. Now let's see if we get bid back up over 80. Over 80 would be okay. 80 to 83 if you're fast. Wait for the next candle though, right? No, see there's a seller there. See, that's why you wait for the next candle before you go and buy. Right? Wait for it. There's going to be a seller up at 82. So if you are long, if you're buying contracts, make sure you got your sell orders out. Get them out. Get them out. Don't delay. Okay? See, the the buying doesn't last on those quick hops. So if you understand that the buying doesn't last, you know that you've got to buy on that. If you bought 79.80, you're only going to get a couple of points, and that might not be the best trade. Okay? But what we're doing is we're looking to see if that bid still holds on the next candle. I don't think it's going to. I think we're going to get a little lower here. Let's see. I could be wrong. Wouldn't be the first time. Right? I prefer if we did this. Look below and fail of 76 or 75 and a quarter, right? I would prefer that trade. And sometimes you gotta kind of wait for it. Sometimes you miss it. Well, it's a better price, and then I know that the selling under 25 is gone. I know that the sellers they see bids and they'll lift. It's kind of happening now. Let's see if we get any follow through over 82. Because if we do, then we'll be looking for the 86s, right? And that previous day high is obviously there's going to be a seller there. Inventory was short and then kind of corrected. Kind of a strange inventory day, Moran, because of the holiday. We did open kind of lower and then go and did a look below and fail of Thursday's low, which really flushed out a lot of people. No, don't be sorry. Don't be sorry. It's a good question. It's a good question because it wasn't like really clear to people, right? You had to keep remembering that Thursday was the last day and that you treat all of the inventory from Thursday night till this morning as Globex. There's that 83. There's our seller. Right? So we got a nice back and forth going here. That's cool. What would be beautiful if we just had this for the rest of the day? Or, just a couple of hours of just this. Here or here even, right? And we could just go back and forth, boing, 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 boing. Just trade it back and forth. I love those. And it's nice. You got like 77 to 91. It's a good range. You can make some nice scratch there, right? That is my favorite kind of trading, is the rotation of inventory. Because your stops are very, very set, right? You know that there's no reason, like if I'm short, say I short 91 and it starts getting over 93, there's no reason for me to be short, right? So if I'm short 90, 92 stop, cover some at 83. Beautiful trade, right? I buy a little at 78, 79, put my stop in the 76s, sell them into the 83s. Beautiful trade. What more do you want? And your risk is minimal. You know where your playground is. You know where the edge of it is, right? So now you're long. You know there's going to be a seller up at 75.90. Get rid of your stuff. You're long 80, 81, 82, 83. You're selling them at 85, 86. You're making money all day long, right? Once you figure out a nice rotation, just trade it, right? You don't have to you know, beautiful price action. You don't have to memorize pi to like 21 decimal places, right? This isn't string theory. Just buy some cheap crap and sell it, right? When somebody shows you a bid, hit it, right? We want you to make money. We don't want you sitting there trying to figure out what these guys, they issue like a doctoral thesis on how the market works. All a waste of time, right? 80 to 87, beautiful. Now let's see where they sell it to it. Is the market going higher? Is it overvalued? Who cares? We made money, right? You pulled 20, 30 points a day out of this thing. Who cares if it goes up, if it goes down, right? You're paying your bills. Simple, actionable business strategies. That's all it is, right? That's all these trades are, right? And you're managing risk with common sense. These are trade setups. That's all it is. Right? Now another short. Right? You're shorting the 91, 92s against 94, 95. Put your bids in, right? Put your bids in. Right? You got a new box. Those of you just starting out the day, there's your balance zone. Hello. There it is, right? Beautiful. 8 handles, right? Even if you take 4 of those, right, Christian? 4 handles a trade times 3 or 4 trades with 3 to 5 contracts on each trade. Man, like the private equity guys say, you're printing, dude. You're printing. Good stuff, Raj. Who cares if it's going up or down? Right? What are you, Stanley Druckenmiller? No. Are you are you positioned long 300 million in dollar yen? No, you don't care. Just make your money, man. Just make your money, right? We want you to make your money because you're sitting in front of these screens for hours. Your kids are waiting. Your wife's going, "What the hell are you doing?" Right? Make some money and go sit in the sun, right? Bookmap is the biggest waste of time. No large trader, unless they were on a 4-day Coke binge, is going to show you their hand in a retail trading size software, right? No sophisticated large trader is going to tell a bunch of retail traders where his orders are. Think of how stupid that sounds. I'm trading $400 million with a couple of partners, and I'm going to tell the whole world where my orders are so they can front run them or bucket them. Come on. Yeah, that makes sense. You think Colonel Sanders is going to tell you the secret recipe? It sounds insane. In the old days, you'd walk up to traders and go, "Hey, are you a trader?" And they'd go, "Hey, what are you, a cop?" They wouldn't even tell you that they're traders. That's how secretive they were. Right now, yeah, bookmap, sure. Okay, sorry. Sometimes stuff is just really funny. Oh man. Okay, a little bit of distribution here. We're waiting for a little bit more for a few more customers, right? The candle's getting smaller. So when the candles get smaller like this, it's getting a little slow. Right? What I'm waiting for is another sale. Put it on sale again, man. Come on. I'm sitting here going, give me a look below and fail of 75. I'll buy 78, 79 all day. Flip it out. Even at 84, 85, I'm happy. Right? Yeah, try asking an oil trader that back in the 90s. You'd find yourself in the back of a van with a bag over your head being transported to a secure location. What do you want to know? Who are you? Who sent you? Yeah, those oil traders, they don't mess around, man. Okay. Oh, I hate it when it's in the middle of a zone. Come on, put it on sale. Come on now. It's getting sticky. That previous day high still has some people who are short underneath it. I think a lot of people short that previous day high just like as a matter of doing so. Do you see all the bids at 84, 85? Right? We can't get down and print an 83 yet because it keeps getting stuck. Look, there we go. See? It goes down to 84 and pops to 84, 85 and a half. Boom, pop, boom, pop. Right? See? Look at the candles. You can see the candles right here. Look. Right? Space between the candles and that line. Bids, my friend. Bids. Right? Bids. Right? Had I been on the ball, I should have been buying 85. 85, 83 half, stop, sell 88. Boom. But I'm not that fast this morning. Right? But did you see how when it got down to 83, it was like trying to shut a suitcase that didn't want to close? You guys, did you remember that? Go back and replay it. When you do your chart replay, go back and replay that. Because if you want to know, oh, I don't know when to get long, can't get it right. That's it, man, right there. Right? That's the candles telling you, hey, snap out of it. It's time to go long. Right? Am I the only one who had coffee today? I kind of feel like I am the only one who had coffee. Okay. Get used to seeing it. It's very common in this market. Get used to seeing that little space. It's very, very common. There are little tiny things. That's why I look at a 1 minute candle chart. It's like looking at this thing under a frickin' microscope. Okay? It shows you so much. All you need to know is what to look for. That's the problem. Because people are looking for dojis and emojis and karate studios and shit, and they're not paying attention to where the seller is and where they stop selling. And that's all you got to pay attention to, right? That space are unfilled buy orders. Otherwise, we would have traded down through that space. There. Yeah, those are unfilled sell orders. There you go. Now you're cooking with gas, Jimmy. Nailed it. So the sellers start. You can think of this that's a parking lot. That circle that you drew, Jimmy. That's like a parking lot full of people waiting to sell, and then they start lowering the tops of those candles because they want to get out of the lot. They're lowering price. Now you got it. See? Sweet. And now we're back in that area. Look how we came back. All those sellers are like, hey, fresh meat, let's raise price. Will they pay 94, 95? Yeah, they will. Cool. Let's see if we can run the stops and go tag 7,600, right? Because we haven't traded 7,600 on that new contract yet. So let's go see. Yeah, this A period is like War and Peace. This is a long ass A period. Excuse my language, but it feels like it's maybe that or it's because I've had so much caffeine. Anywho, we're looking for 7,600. Let's go tickle it with some order flow and see how it reacts. Do they front run it? Do we come right back down? Right, because this is our little playground right here, right? 76 to 96. It's a nice playground. Now, if you're shorting this, right, where's your stop? Stop's just right above that A high, okay? Your stop's above that A high. I am itching to short this, right? I'm itching to short this, but what I'm trying to do is I'm trying to wait for the next candle because Normally I'd be short 95, 94, 95, right? They just ran that stop when the period opened. Now I'm waiting for this next candle because I always end up shorting it and then getting it stopped out and then it works. So let me wait for the next candle. I'm not going to get the best trade look. Oh, don't run it all the way down, you rat bastards. Come on, bid it up, bid it up, bid it up, bid it up. Right? I'm waiting 5 seconds, 3 seconds. There. Now we've got sellers. So we're shorting the 94s, right? And I'll work that 96. I'll work the 96 as an out, right? And where should I bid? 92? It's not the greatest trade, and I'll probably scratch this thing. Let's see. In hindsight, I should have waited for the next candle. I need a seller. Come on now, baby. Sell it down. Be normal. Come on now. Want that offer to move down under 93. Come on. Come on. Nope. Not just yet. 7 seconds. See, I need that offer to move lower. That's not what. Come on. Come on now. See? So if the offer starts taking 96, right? Then the business doesn't make any sense, right? There we go. Come on. Ugh. I'm 93 quarter bid. I can't even get one measly contract, right? So watching, I got one. Oh, they filled me on one, filled me on another, filled me on another at 93. Not the greatest short. I should have done more and should have been a little late. And then the next bids would just go here under 91. And then there's a standard deviation there. So you know that there's going to be a bid probably here at 89.90. Okay? But you're just managing that short on the way down. My trade location was not bad. Wasn't great. $91 bids probably didn't get filled here. You want an aggressive seller, right? Sell it hard. And then now the next candle that opens, we'd love if that next candle can't get over 93 3/4, right? That's where the sellers are, right? They're right here, here, here. The next candle would be great if it's lower down and it'd push lower. The theory behind this that these guys came up with was the rotation of you do the look above and fail. So you short, stop, cover, target is the bottom. Then you do the look below and fail, long, stop, target is the top. Right. But in this market, close to all-time highs, the order flow is not really smooth. It's tradable, right? But it's not really, really smooth. So you kind of you don't want to overtrade it, right? Because you can see you can, if you're not like totally dialed in, you're going to kind of slip and make mistakes, which are costly, right? So I always recommend on a Monday, kind of start slow, do a couple of trades. You know, if you're not really sure what's going on, just trade with the micro, right? Until you get your kind of, your rhythm, your a sense of the order flow, a sense of how business is going that day. That's what you want to focus on. Take it nice and slow. Once the candles start getting small, it's once the candles start getting smaller and smaller and smaller, it's really not It's not much fun to trade. Don't want to waste a lot of money getting chopped around, you know? That's the important thing. Always want to keep the money you made. We don't like giving back money. Really don't like giving back money. Okay. Nice trading, Lear. No problem, Hex. Well done. Well, just make the money and then, take the money and run. Always take the money and run. Always lots of opportunity. Always more trades. The one thing where trading isn't like athletics is when you start getting tired in trading, don't try and push through that. Go take a break. Don't try and push through that. Okay? Yeah, you got to keep alert, right? So right now the candles are a little small, right? The rotation, you can see the rotation smaller, right? Before you had this big rotation, now you got this tiny little one here, right? So that is a rotation. It's just business. It's time frame inside a time frame, right? What else? What else? What is? Business is slow, my friends, right now. It's slow. Imagine if this was a real market, everyone would be sitting around drinking coffee now, right? You first had the initial rush of customers, right? And I just looked at my watch, and this is exactly what time the lady with the coffee cart would come by. It was a thing. Okay, what's next? We just need some more customers. Be the chop, exactly, right? That's exactly it, man. Be the chop. Yeah, we haven't been up here for a while. You're right, Raj. It's been a while. Let's go tickle 7,600. I want to see what's lurking. Do we stop? Do we go right through it? Do we stop, drop, and roll? What do we do next? There's 7,600. A little bit of a seller. Not aggressive. Front ran it. Just trying to figure out what the order flow is going to be like later on. See if we can find any clues. There we go. There we got a seller. Beautiful. Finally got a seller. Let's see if we can take out the 94s. Beautiful. Down to 92. Too many bids. Come on. Shorting this market is like pulling teeth. Seriously. Oof. I'm not short. If we can take out 90, if we can take out these 90 bids, then we'll have a shot down to the 84s. Right now, every time we get down to 90, it lifts. If you're in this short, congratulations, because yeah, that's where that standard deviation there. We need to break that. We need to break 90 and offer underneath it. And then everyone who's long over 90, 92 to 96, they'll come puking out. There we go. There you go. That's what you want, right? Now the next candle you want to offer under 90 and break out that 87. There's no such thing as buyers or sellers in control. No, hi, Jonathan. Welcome to the room. No, so it's not control, Jonathan. It's commerce. So the sellers have product, right? You with me? Just say yes or no, so I know that you're on stream. You're on stream, right? Cool. Okay. So say you have product, right? And you're all selling up here, right? You're positioned long from 79, and all of you are selling up here. But then you get competition from other guys, right? They start selling, undercutting your price. That is what creates that what you guys call imbalance, right? We don't call it imbalance, right? Because you're either marking price down or you're marking price up. I've been a seller my whole life. I've done nothing but sell billions of shares of stock into US markets. This is what I was talking about, the selling, right? Exactly. Mark up or mark down to do business. Now you're cooking with gas. So right now, just like I said, if they start reducing price under 90, then you'll get a little bit more. You'll get some of these people go, oh crap, and they'll start flushing out, right? That's why you want to be short and put your buy orders down here. So when the market runs down, boom, 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 you get hit and you make your money. Then you don't have to chase, right? It's beautiful not having to chase. There you go. It's mark up or mark down, right? It's just a commerce thing. A lot of people, a lot of people think that it's a fight or a battle or a war. It's not. And nobody's in control. It's just a business, right? So I always just say it's not about control, it's about commerce. How much can I sell? How much of this can I buy? And then how much can I get rid of at high prices? You see how they're having to mark down the price. So the trade that we teach, that's why we draw these weird boxes, is so you can do the look above and fail and the look below and fail. So you're trading from the outside in, from the outside in, right? So I was short, say I was short 92 or 90 against 92. Go put some bids here in 86. Make yourself 4 points, right? Four points on a couple of contracts that pays nicely, right? Even if you make $400 on every trade, you do 2 or 3 trades, and you're making good money every month, and you're not killing yourself, right? And you're trading simple, right? So we're looking for bids when we get down to remember last time we came down here, 84 couldn't get past, right? Now we're looking for, right, we got underneath the previous day high. The next place that we're looking for bids is 79, which is just dropping into nicely right now. Boom. If you're still short, that's where your destination was, right? It's amazing what one weird little box can do. If you traded just, all you got to do is just wait for the edge. Boing, 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 boing. Okay, it doesn't get down any cover, right? That's the beautiful thing. If it doesn't, there's no follow through. Just cover if you're short. Hey, Mike, what's up? How you doing? Good to see you. It's simple, man. This is the simplest trading. You know why it's simple and why we like it simple, right? That's what professionals do, right? Professionals in the middle, Jonathan, what they do is we're in the middle like here. So under 87, I'm a buyer. Over 87, I'm a seller. And I just work that back and forth. At the end of the day, these guys make $500,000. Buyers want the highest prices to sell, but sellers want to sell, inventory, distribute. I think if you just want to kind of slow down, what's confusing you is you got a lot of stuff going in that statement. Don't worry about the buyers. Just take the buyers and put them on the bench for a second, okay? Right? We're going to give them a little water break, right? So you're a seller and you got 5,000 ES contracts, right? So when buyers come in, you're going to raise price. When buyers start walking out the door, you lower price to get rid of your inventory. That's all it is. If you just think about it that way, you won't get confused. You don't care what the buyers want. All you care is about what the sellers want. The sellers want to sell their inventory at the highest price possible for the longest time possible. But guess what? There are realities of business and there's competition. So because of competition, you have to mark down price. And that's a market. Whether you're selling fruit or, tires or whatever, right? You have competition. So all our trades, and that's all you have to really think about, right? You don't have to really go into it any more than that. Now you can focus on making money, right? That's what I talk about Walmart. You don't care about the buyer in Walmart. If there's a bunch of buyers, we raise price. If it's slow, we lower price to move the inventory, right? We don't care what the buyer wants, right? We just want to offload this stuff because we got another shipment coming in of some other crap that we got to sell, right? All we want to do is move product. Sometimes we move it at a really good price and make a lot. Sometimes we just make nickels and pennies. But we're always making a bit of money, right? We're making that spread. Buy it, sell it, buy it, sell it, buy it, sell it, buy it, sell it. And that's the whole business. Our trades are based on this, right? When it gets to the edge, when those sell orders are done and the buyers start coming in, then what we do is we buy a little bit here, right? Say you buy the 80s, right? You're buying the 80s, the 81s, right? Your stop is under the bottom of that candle, right? If it starts losing the 78s, then you start selling, right? And then you put your sell orders out. You know that 83, there's going to be a seller. Let's go sell some at 82 and see if they take it. Right? Come on now. Oh, now we know there's a seller right there. Boom. See? I should have been a bit more aware. But there, we got a seller there. There's a wall of sellers all right there. So if we're buying this area, our out is here. Right? If you're a big spender, you're out 76.5. Right? Smaller traders, you can use the bottom of that candle. If you want to let it work a little bit, you can. But I'd say, you know what? Why waste money? You're going to be early lots of times in this business, right? Larger traders, if it holds 76.5, you're okay. If it flushes 76.5 and takes out the bottom of the candle, then you're in trouble. So manage your position, govern yourselves accordingly. Right? You can see the sellers now moved down from 82 down to 78. Right? So now you know that trade is, right? You'd be getting out of it, right? If you were long 80, 79, when it starts taking the 78s, you start losing contracts. You can always buy them back if it pops back up, right? For traders who can't, then you got to wait. Let it show you a bid. Let it come and bid above 80, 75, 80, 78. Right now, let the large traders work this out. This is how you navigate markets, right? Don't worry, Jonathan. You just joined the room. Trust me, this is not the last time you're going to hear about this or how to trade it. This is all we do. Right? Our job is to take simple trading and make it manageable for you guys. So, like, say I was long the 79s, I'd have been getting out of this trade under 78. So you take 4 to 6 ticks of a loss. Sometimes you're going to be wrong, and if you admit you're wrong quickly, it's a hell of a lot easier to run this business if you say, you know what, I'm wrong quick. Right? Because you lose a little bit of money, sure, that's fine. That's the cost of doing business, right? Those are business expenses. You just want to control your expenses so you're making more than you're losing, right? So right now, if you're looking for a long, right, I'd be waiting for over 78. What I'm looking for now is here, 75.58 if I'm looking for a long. I'm not going to buy it in the middle of this zone. You guys work it out and call me when you're done. That's how I look at trading. I'm not going to be the sucker who goes first, right? I'll let these guys work this out, right? I haven't done the calculation. So Jonathan, for me, because it's a business, right? For me, it's a business. So what I got to do is I got to trade. I got to take a trade And when the business reason for that trade disappears, I'm out of it. So I bought 78s and 79s. So I was 79.80. Sorry, that was long. When the market took out that 78, I automatically sold the position. So I haven't done the calculation, but it's cheap. And had that trade worked and I was long 78.79 or 79.80, and I'm selling 82.83, and what I make the reward's pretty decent. And when you trade at the edge, that's where you have the best chance, because that's where the best deal is. We got some bids at VWAP, but I don't really like to buy VWAP. I like to cover. If I was short, I'd be covering here. It'd be a good place to cover. Nothing wrong with that. Got a seller here right before 75 quarter. It is. Because you have a two-sided market. Nice. Well, that's it for me, folks. Thanks so much for being with us. Thursday, we're going to be redoing another podcast for Proper Villains. And the title of it is How to Steal Order Flow. You guys have heard about trading order flow. You should learn to trade from somebody who's actually stolen it. It'll be an interesting podcast. I'll teach you guys on how we used to steal order flow. It's one thing to trade it. It's another thing to actually be intimately involved in the creation of it. Thanks, everyone. Have a great morning. Stay out of trouble. Come visit us at tradingsyndicate.org. We've got a great community, and we really try and help people. Love to see you guys. Welcome to our new members. Reach out. DM me. I'm always around. Thanks, everyone. We will see you in a little bit. Buckle up. It's going to be a long week. They always are after a short week, aren't they? Thanks, everyone.